What's going on, traders? This is Mike with Tactical Traders. Right now, I'm doing some weekend scans on January the 3rd, 2021, going into our first week of trading in the new year. Right now, I am looking at ticker symbol ZOM, and this is the daily chart pulled up over the last year of price history. So as you can see, over the past year, it has not been the most favorable for the bulls. However, there is some things happening now on the chart that could be some signs of a reversal in the bullish favor. And we're going to be going through the chart very briefly and just highlighting some areas of interest and what to keep your eye out for. So I just wanted to sprint up this daily, but we are going to be focusing more on the intraday chart. But I do want to show you the daily chart because there is some things that you should keep your eye on. All right, so first things first is this price is pretty much going sideways in the first part of the year. Having a range, really not too big, usually only about a 10-cent range. And then it started just trailing down and down and down, getting to a low of only 6 cents. And then we had some good volume coming in, some very impressive volume the last month or so, especially when you can't compare it to the rest of the year. And the price has picked up and moved on up. Now, the great thing I do like about this price movement here, which in the bullish favor, is that the price got above the 50 and the 200 SMA here. Now, whenever the price is above those, in my eyes, it's showing me that it's going to be a more of a bullish, more of a bullish vibe to it. And as you can see over here, we have the 50 SMA about to cross over that 200 SMA, causing a golden cross. Now, usually a golden cross is a lagging indicator, and that's pretty much where we see these big moves. However, that is just going to be a really nice little sign for hopefully this trend to continue. So we're going to be looking at this almost pretty much as a possible reversal here, going from a bullish context to now a bearish. So one area of resistance that we see right in this daily chart that's pretty obvious is right here around this 127, 128 area. You can see it was rejected over here, pretty much rejected over here. And yes, it did momentarily get above that, but not too long. And then you see that there's some thin wicks that trade above here too. But like I said, it's thin wicks, meaning they are thinly traded above that price. So overall, I'd say 27.5 to 28 cents is definitely an area of resistance on the daily chart. But I do want to look at this more of an intraday chart, so we're going to drop it down. We will drop it down to, let's see what the 1 hour 20, yeah, all right. I'm going to go a little bit low. I'm going to go down to the 30-minute 10-day. All right, so now this has a little bit more of a clear picture on it. So as you can see, the volume has been pretty good, like I said, and the price action has climbed up. It did hit that resistance right around the 27 mark, and then it's pretty much pulled back and gone sideways. And this is a pretty healthy view, in my opinion, this sideways action right below resistance. And right now it looks like on this chart we have some support right here at the 23 cent area. You can see it was tested here, bounced off, tested here, bounced off, and now we are touching it once again. So 23 cents is definitely going to be an area that a lot of bulls are going to have their eye on for an area of support. So this should be a pretty interesting spot. Now we're going to be expecting this price action to continue up. And when it does continue up, we're going to be looking at the 27.5, $28 level. Cent level. And we're going to want price action to break above that with an increased amount of volume at the same time. The increased amount of volume is going to be crucial for many different reasons. One, this being a penny stock, you need volume there for liquidity. Second, you want the increase of volume when the price breaks above that to show you that there's a lot of eyes on this, a lot of bullish momentum, a lot of bullish strength that are also joining in on this price action because they are also expecting this breakout to be nice. Now, if there's not a lot of volume, use a lot of caution. That's when you can get trapped into a lot of fake out breakouts. All right. So anyways, we're going to be looking at that 27.5 area. Right now down here, I do not wish to buy this as a speculative buy, meaning I'm buying it within the pattern itself or in the channel itself, purely because on this one, given the history of it, I would prefer to scalp this more as a day trade or intraday trade. If you do want to swing this, no problem with that. It's just not my style and not what I'm going to be looking at. But if you are looking at swing trading this and you're not already in it, I could see it being logical to get in at the 23 cent area with a tight stop loss down here, probably below the 21 cent or 20 cent area. So once again, I do recommend this for more of a confirmation breakout past 27.5 with the increased amount of volume. But if you do want to start loading now and you expect a larger move and you want to swing trade this, then yes, that is a logical area to go long. All right, traders, well, I hope you liked this video. If you did, please hit that like button, subscribe to the channel for more videos like this, or check us out at tacticaltraders.com where you can get access to our live 24/7 chat room. Thank you for watching, traders, and until next time, stay profitable.